So in previous chapters we've dealt with the situation where the owner either gives the business money or takes out drawings of money. Situation 3 is where the owner gives the business something or takes it out that's not actually cash. So it could be if the owner gave the business cash, we know that goes in your cash receipts journal as a capital contribution. And if the owner withdraws money from the business, that goes in our cash payments journal as drawings. But what if, for example, the owner gave the business a desk or a computer or a vehicle? Well, the owner can do that just as much as they can give the business money. Likewise, the owner can take out money, but they can also take out a computer or stock or a desk or something like that. And what we need is a journal, in this case the general journal, to record that. So let's take an example. On July the 1st, the owner contributed an office desk to the business with an agreed value of $200. So we learned about the concept of agreed value in a previous video. So what we've got is a general journal entry on the 1st of July. We're going to have office furniture, which is an asset, go up, which is a debit, and that's going to increase capital. So capital goes up and capital increases on the credit side. We'll do an oration, be quite descriptive. So in this case, owner contributed office desk to the business, and make sure that memo number's in there. So in this case, we need to now post directly to the general ledger. So we've got office furniture, so that's going up, so that was a debit. And we had capital, that was an owner's equity account going up, so that was a credit. And the two accounts reference each other, as you can see. Looking at the dates, the journal's always the actual day of the transaction and the ledgers are the last day of the period. What about the owner taking out stock for personal use? In this case, a shirt with a value of $100 plus GST of 10. So the first thing we want to think of here is, are we going to record these drawings at the cost price of 100 or the GST inclusive amount of 110? So what's happened is the business has already paid the $10 GST when it bought the stock, so we don't need to account for that again. So we're just going to record drawings at the cost price. So in this case, any withdrawal of an asset by the owner does not include GST. So in this case, we've got drawings, which are a debit of $100, and stock, which is a credit of $100. Put a description in, owner withdrew stock for personal use, memo 1. And now we post. So drawings are a negative owner's equity, and when they go up, that's a debit. And stock is an asset going down, so that'll be a credit with the two accounts referencing each other. Actual date always used in the general journal, and last day of the period always used in the general ledger.